I mean, I'm not really sure how high it can go. I think it'll go higher than people think possible. But when you hear, the head of TD Securities, I think his name is Daniel Gali or something along those lines, come out and say that he estimates the London Bullion Metals Association silver free float, that would be the stock of silver backing the treasuries, stands at its lowest levels in recorded history, only to about 150 million ounces or so. That's less than a single day's worth of trading volume for spot silver in London. Um, when you see the lease rates in London soaring as high as 8 or 9%, I mean, I've never seen that before. Those are that's the rate that would cost to borrow silver to cover a contract, let's say, or to short it. When you see that, I mean, look, silver's up almost 35% this year as it is. When you see the commercial banks come in and they last week were short almost 80,000 contracts over 400 million ounces, and they built that position at 37.50. So anything above 37.50, they're bleeding at over $400 million per ounce, per dollar. They would be losing over 400 million. So what is silver today? Let's see. Silver today is roughly 38.30. So they're down about 80 cents. They're down $350 million on that trade. When you see the fact that yesterday there were zero shares of SLV to borrow to sell short, I've never seen that before, ever. Um, Telling you that the market is getting very, very tight. When you see the exchange for physical fee surge by almost 250% in just 2 days, that's the cost to swap silver from a futures contract to physical or physical to futures, either way. That indicates massive stress in the silver market. All of these things are pointing to silver, including breaking right there. It's right at the breakout point of a 45-year cup and handle. It's broken through a falling wedge. Everything technical, everything in terms of the LBMA, the supply, the delay. The London Metals Association is a T+1 market where T is the trade day, +1 to settle. On the third day, the bar should be moving. They've been as delayed as 8 weeks, citing a shortage of manpower and trucks. But as we heard, they have 155 million ounce free float. David Jensen does an amazing job pointing to the LBMA statistics, and he says they trade as much as 1.9 billion ounces a day on paper. 1.9 billion with 155 million backing it. 1.9 billion ounces would be 3.5 times annual global mine supply, and in this case, over 12 times the float. And then they get all these deliveries, and sorry, we can't move it in one day because the Bank of England doesn't have enough in the way of trucks or manpower. We're 8 weeks delayed. That almost is that break, that default. I think the commercial banks realize this is an existential threat. I think this is a game that has been exposed by the big players around the globe. India, China. India and China alone are buying so much gold and silver, it's ridiculous. And India's bought about 900 million ounces in the last 5 years of silver. That's more than the LBMA has total. And when you talk about, remember, most of the silver in the LBMA belongs to ETFs like SLV, who's controlled by BlackRock and JP Morgan. There's so much that you can look at that point to silver really being on the verge of exploding. And silver, I mean, China had just confirmed this last week with both Keith Neumeyer and Sean Kun. Keith is First Majestic Silver CEO, and Sean is the CEO of Dolly Varden. And they both said that China is flying all around Mexico and Latin America, Peru, and buying doré and concentrate directly from the miners, and have increased their buying from artisanal miners all around the world, from small miners. They'll buy everything that they can sell because this disintermediates the marketplace. So they join in with the Western banks in shorting the price on COMEX, and then they go all around the world. and they buy right from the miners doré, which is a crudely refined bar. They buy concentrate, which is a byproduct of that refining, and it's like a sludge in a jar, and they send it back to China and refine it themselves, or they buy it directly from Mexico, as Vince Lancy says, long before it's even called silver. They're just buying the doré, and they refine it themselves. They're the second largest producer of silver in the world. They're doing the same thing with gold. They're the largest. They're buying up everything they can get in commodities. And silver is probably the most undervalued asset on the planet. And to see the length at which a country like China, who produces second most in the world, flying all over the place and buying doré and concentrate, paying double what the West will to ship it back and refine it, should tell you all you need to know. But then you see the second largest delivery in the history of the COMEX market on the May contract, huge amount in the June contract, huge amount in the March contract. Month over month over month, we're seeing massive deliveries into the United States. Who's buying it? Who's taking possession of it? It's a lot deeper than tariffs, I can assure you that. Yeah, I think we're really close to that moment, really close to that moment. But this is a high stakes game that will probably take longer than most people can deal with. That nanosecond thing again, you know, you can't look at it in terms of nanoseconds. Play the long game like China is, who's trying to go all around the world and accumulate commodities for their next growth spurt within the BRICS. They just bought the London Metals Exchange a few years ago, all the base metals, their Belt Road, all of the 155 plus countries that are resource rich and underdeveloped. That's the whole premise of the Belt Road. All of this stuff points to commodities being massively important. And I'll tell you what, John, in my mind, silver is not industrial, it's strategic. And by the actions of these countries, it's proving that. Yeah, I think silver might be the best play of a generation. And the word I think of when I think of silver is asymmetrical. Very low downside, huge upside. So yes, it's a place I would park my money right now for sure. There's a man named David Bateman. He's a billionaire. And on Twitter, he wrote this, and I'll just read it verbatim. Here are the reasons I invested close to $1 billion in precious metals over the past 6 months, including the purchase of 1.5% of annual global silver mine supply, 12.69 million ounces. The global monetary system is about to collapse, the Great Reset or the Basel Endgame. The biggest credit bubble in history will soon pop, 300 trillion. There is no way the U.S. can refinance its 28 trillion in maturing treasuries in the next 4 years without an obscene amount of printing. Trump tariffs are hastening the collapse, and it's by design, to your point. Gold and silver are the only meaningful life raft. Physical possession is everything. The whole world right now is a sophisticated game of musical chairs. The chairs are precious metals. Now, he writes this, I don't, so all you crypto people don't get mad. Crypto is a psyop. Those who purchase will have no chair when the music stops. Real estate, crypto, stocks, and bonds will all lose significantly compared to precious metals. The banking system has been meticulously designed to seize your assets to buoy up a collapsing banking system. See the great taking. You have zero counterparty risk with precious metals. I'm up 20% already on most of my purchases. This is not a drill. Your grandkids someday will either muse or lament this financial decision you are now faced with. Do not fail them. Well, that comes from a billionaire. And usually when you're at that level, you are also very well connected to the information. So take that as what you will. David Bateman, he is on X. You can go to and check him out yourself. He put that on there a couple months ago. But I thought it was very relevant in terms of discussions, any discussion on silver right now.
Yeah, well, there's no question. He had me up until crypto. I have to disagree with him respectfully on that. It's not a psyop, but I mean, crypto isn't for everybody. Just like certain currencies or whatever are not for everybody. It's a very fluid, customizable thing. Everybody has to work with what's comfortable for them. And I personally am in the belief, and I think you are as well, of diversification. That doesn't mean that's the ethos of everyone. So, he's certainly entitled to his belief. But it does underscore the point of the reset we talked about, going into BRICS, assets in the ground, et cetera, and the hugely integral role that gold and silver and eventually copper play with that. Recently, Texas Governor Greg Abbott signed a House Bill 1056 in the law, Andy, making gold and silver legal tender for all transactions within Texas. The law is set to take effect on May 1st of 27, which thereby gives state agencies time to implement systems that will ultimately allow precious metals to function seamlessly alongside traditional U.S. currencies. this currency. I know you keep track of the states and proposed legislation for gold and silver being used as legal tender. Interesting side point before my question, Andy, you probably know this, but I recently discovered that Tennessee and Texas have been trading partners since the early 1800s using gold and silver as legal tender. So it's interesting when Texas does something, Tennessee and other states like it seem to follow, interestingly enough. Do you have any information on developments in this regard that our listeners might not be aware of?
I've had a few people ask me. I tell them it's not time. Don't do it. You don't do it until it's 50 to 1 or below. I think it's silly to do it otherwise. And I think it's just because a lot of people have grown tired of silver's lack of performance, but then all of a sudden silver popped and has outperformed gold this year. So maybe that was that was probably from more than a week or so ago. I would think that question would be asked less right now. And silver is very close to that breakout that would very, very quickly decrease that ratio, which is still very much in favor of being in silver. You get south of 50 to 1, the argument would be to consider gold. It's coming out of the ground at 7 to 1. So it's not the time to do it, but I understand it based upon its performance in relation to silver, gold's performance in relation to silver over the last couple of years. But silver is starting to catch up. It's starting to slingshot. And from a technical standpoint, it looks actually better than gold. So I wouldn't be doing that yet. Ultimately, it's on the playbook, but we're not there yet. We're still on the 30-yard line. You got 30 yards to go for a touchdown. It would be premature to try to do it now.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers, but physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming, young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation, silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.